So you've decided it's now the time to improve your finances. You've got yourself a plan, a budget, and you've even got the motivation. There's just one thing that's bugging you, your credit score. Well, don't worry, because in this video, I'm going to be giving you 5 tips that you can use to build up your credit score. And at the end of the video, I'm also going to be talking through my own journey with my credit score. Hello, welcome and welcome back to my channel. My name is Veronia, and if you don't know already, I talk about all things to do with money, your career, and having a positive mindset for success. So if that does sound great to you, then be sure to subscribe to my channel and hit the bell notification below so you don't miss out on any new videos. So if you've watched a couple of my previous videos, you know that I do like to go back to the basics first before I start jumping in with strategies. So the first thing I want to talk about is actually explaining what a credit score is and why it's even important. So basically, credit scores are usually used by lenders to predict your future behavior based on your past behavior. And they do this so that they can see whether you'll actually be a good risk, plus so that they can see if you're going to be a profitable customer. And those factors can basically affect whether or not you'll be accepted for credit. They could also affect the interest rate that you might get as well. So just as a practical example, if I previously lent you money and you paid me back on time, I would probably want to lend to you again. So in my mind, you would be considered a good risk if you ever wanted to ask for money again. But if I lent you money and you then paid me back late, or you didn't even pay me back at all, then I would probably think twice about lending you money again. Hey, I know I borrowed £100 from you last time and didn't really pay you back, but if I can just borrow another £1,000, I promise I'll pay you back next week. No. So credit scores are actually important, particularly if you're looking to borrow a certain amount of money. So if you decide to apply for a mortgage, then your credit score is likely to be taken into account. So I do think it is something you should be taking seriously. Also, these days, there are some lenders that will look into your score when you might want to apply for mobile phone contracts, car insurance if you're paying monthly, and even utility bills. So it is really important that you do check your score, even if you're not looking to borrow a large amount of money. I'll also put a couple of links in the description below where you can actually find out your credit score. So there are different credit agencies where you can actually see your report, and Money Saving Expert does have a lot of information on that, so I'll be sure to put a link in the description below as well. Okay, so the first way that you can actually improve your credit report is to actually look through your credit report and check that everything is correct and up to date. Again, you can use credit agencies for this, so for example Experian or Equifax. Personally, I would be doing this every few months. You basically want to make sure that there's no incorrect data at all, because if there are errors, that could actually have a negative impact if you want to apply for credit. So you might find there's an unexpected bill on there where you have no idea where it came from. Or worse, you find you have a mark on your file because you didn't pay. Since when did I have outstanding payments to T-Mobile? I left them years ago. Again, I would try to check out more than one credit agency just to be safe. And also to make sure there are no surprises when you eventually want to apply for credit. The second way you can improve your credit score is to make sure you're actually registered to vote. And I do think this is one of the easiest things you can do. So if you're not on the electoral roll, it can actually be quite hard for you to get accepted for credit. So please, if you haven't registered to vote, just do it now. I'm not joking. Do it now. I'll wait. The third thing that you can do is always be on time with your credit repayments. Do not be late with your repayments ever. Please, please, please make sure you are paying on time. So my credit card payment is due this month. If I pay that, it means I can't go to Nando's. Credit card, Nando's. And the reason why I say that is because if you start to miss payments, this could actually have a massive impact on your score. So personally, I would be setting up direct debits so you know those payments will be taken out as soon as you get paid every month. The next tip to improve your score is to try and pay off any high interest debt. Now, I do think this is an interesting one because a lot of people do ask whether you should actually be doing this. Now, I do not think you need to be in debt to have a good credit score, especially high interest debt. Yes, I do know that lenders like to see you have some credit where you're managing it responsibly, but this doesn't mean you need to be in thousands of pounds of high interest debt just so you can boost your credit score. It doesn't work like that. Sorry, Veronia. I got told if I financed my BMW for £30,000, my credit score would be excellent. Trust me, there are ways of building your credit score without having to use high interest debt, which is what I'm going to be explaining in my next tip. But again, if you do have high interest debt, then personally, I would be trying to pay that off if you can, just because first, lenders will actually see that you have more disposable income, so it will look like you know how to manage your money properly. So if it does come to a time where you do want to borrow more money, say for a mortgage, then lenders can see see that you can afford it. Secondly, you'll have less payments, and that can only be a good thing. And if you are looking to pay off your debt, then I do have a couple of videos on that as well, so I'll be sure to put some links in the description below. So the next way you could possibly improve your credit score is actually getting a credit card, if you know how to manage it well. Now, before you start to think that I've probably contradicted myself, I am not saying I want you to get into credit card debt. That is the last thing I want you to do. I am saying you could get a credit card only if you know you can control your spending. So if you do get one, you need to be paying this off in full every single month. And if you don't think you can do that, or you think you'll probably overspend, then I would probably think twice about getting one. So credit cards, when used correctly, can actually help to build your credit score. And that's because lenders will be able to see that you are actually using credit, but then if you're also paying it off every single month, it shows that you're actually responsible with the credit that you have. Now, if you watch my debt video, you will probably know that I was actually really scared of getting credit cards. And that's because I thought if you did have one, you'd end up in so much debt. But then I realized if I pay my credit card off every single month consistently, then I wouldn't need to pay a penny in interest. Plus, it would help to build my credit score, so it was a win-win situation for me. You can also set up a direct debit, so it automatically takes the full credit card balance out of your account as soon as you get paid. And if you do this consistently, you'll be surprised at what this can do to your score just in a few months. So I would say that my credit score has been changing quite a bit over the past 18 months. And if you watch my debt story, you would know that during a period of time, I was trying to pay off my car and my overdraft. And during that whole time, my credit score was basically scored as fair. It did not move at all. Then once I paid off my car and overdraft, my credit score shot up all the way to excellent. And I do think it's because lenders could now see that I had a lot more disposable income. So looking at my personal experience, I don't think you need to be in high interest debt just for you to boost your credit score. But then soon after, I did actually take out a credit card. So during that month, my score did slightly go down to good. Now, I would say this is quite normal because you would usually find that if you are applying for credit, your score might drop down a few points. But after a few months, it should start to stabilize and hopefully should eventually go back up. So that is exactly what I'm waiting for. So if you did like this video, then please do give me a thumbs up, as it does really help to support the channel. And also let me know in the comments if you're planning on using any of these tips to improve your credit score. I do post every single Friday, so if you are interested in learning more, then please do subscribe to my channel. And again, I will see you next week.